Okie dokie, folks. This is Coach Mike. Gonna get started with our focus group video. Um, gonna start off this video with saying um, not all the trades I have listed in the spreadsheet are ones that I'm going to be taking with my focus group account. I got a couple that I just need to kind of wait and let them see what happens with. And, to be quite honest, I've got very limited, after a few hits that we took with the focus group account, kind of limited on the number of positions that I will be able to take right now with the focus group account. In fact, looking at the available cash, I can make 3 positions. So here's what I'm going to start out with, because I saw this and I know some people might be in a different situation than me and might be interested in this one. And I am actually going to take this with one of my longer term trading accounts. And it's the October 16th strangle that I have posted on the spreadsheet. Apple had a really flat day on Friday, and literally in the last 10 minutes of the day had, right now what I think we'd have to say is just kind of a flash crash. It was completely out of the blue, fell down below 126 after hovering around 128 all day long. Um, and really, still looking at this weekly chart, the week before last, we actually, for several weeks, we had talked about how on the last pullback we had pulled back to not a 100% Fibonacci point that I had, but a 78.6. We saw that do that the week before last, and we still do obviously have a positive move from it with this weekly candle. Obviously, that big drop at the end of Friday kind of um, hurt the way this candle looks overall. I do have a couple theories on why it dropped like that, and theories that I spent about 15 hours constructing, but in reality, it'll be 30 to 60 days legally before we have to see any reporting on as to whether I'm right. So I'll just save that for another discussion as to my theory for that. But anyway, just kind of looking at Apple, I kind of saw what I see to be a potential for something very, very rewarding. And I'm going to have to start by taking this back to a 5-year weekly. You know, if you look at this big up run Apple had into 2013, you see where it kind of peaked, made a drop, made another peak, and then, so went on the 7-month struggle of Apple. This was back when Apple went from $700 to like 360 or something like that. Um, And ironically, after another pretty big up run, you kind of got the same movement between the two peaks here and here. So just kind of be aware of that when understanding what I'm talking about here. And again, this is for the October 16th strangle play that I've got listed for the 150 calls and the 100 puts. With just the Fibonacci's as they've carried out, so on and so forth, it does give me a potential rise point to 150.33. Basically with the 1016 150 calls, if we were to go up like basically after this next earnings, which is going to be the week of 420, and start to make that move, that would be the area. If you remember on this last up move for Apple, I was expecting 129.40. It went just a little bit above that, but once it basically hit that 129.40 area, it stopped moving at the same rate it was before. So it's pretty close. It'd be about the same expectation. Now, because it went like $3, $4 above that before, maybe it gets $3, $4 above that again, but it's a good point to start kind of watching. And that's where that October 16th 150 calls play comes. Now, as you can see with how I've got it listed, I'm expecting that you'd be able to still buy that at 250, and your estimated risk would be 100% loss. Now, the estimated reward, that 458, that's not what you'd be selling it for. That's the profit on it. So quite literally close to, not quite, but close to 200% profit if you get up to this point. Now, for the other side, the 1016 100 puts, when I went and marked that old, $700 high before the split, the low that it made 7 months later, and came all the way up to this high, which ironically is the same time frame of this up move as that up move that got that little quirkiness up to when Apple hit 700. That's another basis point for this strangle trade that I'm doing. It's not just a random, hey, I'm gonna try this and see if it works. Um, because of that, that leads me to believe that if it replicated the pullback, we could see around 87, 89. Now, I know that seems quite weird because I'll even be the first to tell you that of all the technology stocks, Apple's probably the most fundamentally sound and whatnot. But, I do believe after all those buybacks that they did, that they were smart enough to use also some of that. They bought them back with bond money they got. They sold bonds at zero interest. So they got free money they bought, and now they can turn free money into larger money. But, it's a paperwork nightmare, and they don't want to deal with activist investor Carl Icahn by just dumping shares. So to protect with puts or sell covered calls, do many different things to protect themselves, that's a great possibility that I think has already been done, especially since I saw January 2016 130 and 135 puts have some big, like a super huge volume over the past 3-4 weeks, as we were right into this area here. When we look overall at this, that puts trade, the 1016 $100 puts, obviously those are the 150 calls are very close to, right at the money to my target point, and about $13, 12, $13 below for the 100 puts, but it basically had to do to price factoring in the equation. Now, why did I pick October 16th? Remember, that was the replication of the time in the last fall. So that's why I think October 16th would be the safer trade on those 100 puts. But in all reality, you could probably get away on the 150 call side to go with the July 15th, but take like the 140 instead. This particular trade I have listed is just one that I'm interested in. Again, with the put side, you see that I'm labeling the estimated risk to be the entire trade, 100% loss. But I truly believe that if you take both sides of this strangle, obviously the winning side will pay for the losing side, and that there could also come a time where it becomes quite evident which side will be the winner or loser, therefore allowing you to exit the losing side. Let me discuss those 2 points. First off, if you break below 118.48, I don't think you would need the call side anymore. Second, if we close a weekly candle above 129.50, I don't think you'd need the puts anymore. Now, would you take a loss on those to sell at those 2 points? Yes, but having out till October is going to severely minimize that loss. And basically what my expectation is with factoring based on the Greeks and whatnot of these two specific contracts is that at the point where you would not want the calls anymore or not want the puts anymore, the other side would have you not quite even, actually up about 10 to 12% on the other side for the overall trade, not just 10 to 12% on one side, but would cover the loss on the other side plus 10 to 12%, which that's an important factor of why you might want to take it now. But for people that don't want to even maybe get that loss on the one side or the other, you could use those same contracts, but wait for those breakout points of where you could possibly sell the other side. Wait for those break points and pay a little bit more for the same contracts, but do it at a time where you're not having to tie up money in two different trades. So different ways to take that. Now, again, I want to stress, I'm actually not going to take those two trades in my focus group account. I'm actually not going to do it, but I am going to do it in another trading account I use for longer term swings. And I liked it so much that I decided to put it on the focus group spreadsheet. Now, one trade I am interested in taking, when we bounced right off of that 78.6 fib line from the weekly chart, the one that I had talked about for like 3-4 weeks going into it, hey, I took that May calls trade. It's about even right now. Quite literally, it's down 4 cents from where I bought, 3 cents from where I bought. And that's even with that big flash crash at the end on Friday. But if we were to continue down on Monday, the 417, 124.29 puts, and I know that number seems a little bit odd, but for the quarterlies, there's still factoring in from before Apple split. So that's why you get those weird strike prices. But the 124.29 puts might be one that I take. And even though I have this 117.28 target point listed, I want to kind of show you something over the last earnings period. We've talked a lot about how similar the chart looks to last earnings. Here's where it ran up to 120 or so and came down. And you see the first bottom that it really made down here. If you exclude the wicks, basically you put two more bottoms at the exact same point. I hope you can see that there. Basically a triple bottom that took you right into about a week and a half before the next earnings. And then boom. Well, the reason I don't want to take like the 118s or the 120s or something like that that are cheaper is because those 124.29 puts would be in the money here. And even though there's some other puts that would also be in the money, I actually want something that's not going to be super volatile right now. And if we did come down and replicate this little area like we had before, I would actually exit those puts, wait 2 to 3 days just like before, enter the exact same puts again, exit them again right at the line, and still hold my May calls like I said I would do when I alerted them for after the earnings. So that's where I'm kind of at with Apple. This trade right here, the 417, 124, 29 puts, is for sure one that I am looking at a potential entry on. But understand that, hey, if it doesn't just make the multiple bottoms, great. I've got a target point that I know that based on the high here, the low here, the high here, if it would replicate the same down move, it'd be about there. But it is because of the prior time and the consolidation before that I want you to recognize this low point here around 122.24 that might cause us to sell. Now over to the 60-minute chart of Apple, and you'll actually see on the spreadsheet I've got 3 different 50-50 trades listed. And I've got a really good explanation that there's 3 of them listed. And it all has to do with this one great big candle. First off, I'm actually surprised that candle didn't come down and hit this green line, or at least maybe perfectly fill that gap. So the first trade I've got listed for 50-50 is the 42127 calls. I want to see if Apple does get more downside. Sadly, you got to say, let's take a little break, and I'm going to go to like a 15-minute chart. It's not like one could have caught that drop. In fact, if you look at it, it went sideways all day long, and in one candle, boom. Now that's a 15-minute chart. Let's go over to the 5. 1 5-minute candle, second 5-minute candle. Literally in 10 minutes, at the end of the day on Friday, that entire candle was made. So that's not really something that, you might have caught it and got lucky, but it's not something we really could have caught with waiting for a candle to close like we talk about doing. So what I want to see is if there's any more downside that hits this green line and makes a positive move from it, one might be looking at it right now and saying, hey, that looks like a W. And we would play that like a W retest. When do you buy a W? When it breaks out or when it retests it? So if it were to retest it, we would want to, on the positive move from, look at the 42127 calls. Based on if it were to come down here, I think we could get them for 115 is what I've got there. But, even if they're just less than 125, I'd be happy with taking them. So, that's a potential second position for my focus group account. Like I said, I've only got the cash to do 3. And I'm not hiding from that. And I'm not scared of it either. So with the 417, 124, 29 puts, that's one position that I'm definitely making a priority for my focus group account. And then I've got those 3 50-50s based on different scenarios. One of those 3 is actually something I would look at taking. The 127 calls would be if it come all the way down here, and only if it did that. Only if it came down here and made a positive move, I would look at taking those. Now, let's look at the 42125 puts that I have listed. As you can see, this consolidation that occurred and this one big candle, the last candle on Friday, broke below 2 swing low points. So the 125 puts play is based on if it were to come back up to here, to this point right here, 126.67, and pull back from it. That would constitute the entry on the 125 puts, in which case I think they would be about $1.25. Now, you also have this swing point from that consolidation at 127.49. And if it came up there and started to pull back from it, that would constitute the entry on the 126 puts, which I also think we could get for 125 or less. In fact, when I did the math on it, the play for the 125 puts worked out to 119, and the 126 puts worked out to 120. So I gave a little bit of wiggle room in case we can't get it at the exact price point, obviously, and that's what I think we would be able to see it at. So I'm not looking to make all three of those 50-50 trades listed. I am looking to make one of them based on one of the exact scenarios that I just mentioned. And if it does not make one of those exact scenarios, I'm not looking for an entry on one of those three positions. Going to go over now to a weekly chart on Goldman Sachs. Goldman Sachs has obviously been one that's frustrated a lot of people, including myself. This past week closed above a weekly swing high point, and I don't trade off the swing points from the weekly, but I mark them for good reason. When we start to see swing high points broken, usually it constitutes further up move for GS. When we see swing low points broken, typically it constitutes further down move for GS. Well, this was a swing high point at 191.51 that we'd have to honor because we did pull back from it. And then we have this double top at 195.45. Now, we have two calls positions. We have a couple puts positions. It's obviously starting to look like the puts positions might not work out. And if we break 120 or 195.45, I won't be in the puts positions anymore to see if they work out. I'm simply going to use that as my exit, at least for the 175 puts. But the 180s I'm still debating on, because one thing is for sure, this thing likes to fall into the earnings and kind of fall out of nowhere. Here we started to look like we were going up, and then 4 weeks of a boom into the earnings. And you know what? It is going to have earnings before the 4/17 expiration. So I might at least keep the 180 puts, because if it did that same fall in the same period of time, we actually could still see that 168.58 I've talked about. So based off of this Fibonacci point 203.73, knowing that it does need to close a week above 195.45, off of the weekly specifically, I'm not looking for a new trade for this week. Now off my daily chart, I'm going to have to zoom this a little bit. I've also got that 203.73 target point. Let me show you why we have this. We had this 182.62 target point. I decided to sell one puts play because my expectation was that we would fall to that and go back up to about 189, which we did, and then came down the next day, and then, oh crap, it kept going up. Well, I still stuck within my trade plan. I was glad to at least have profited on one puts play, which paid for another puts play, which was good because I just had one last one expire worthless on Friday, the 160 puts for March 20th. So it kind of, that one puts play I sold there was paid for. But what I want to get is the opportunity to start making money on this son of a gun, but yet finding the right time to do it. So I'm going to do something I don't often do, and it's to possibly get a second position in something I already have, the 417 200 calls. And it's going to be by using the 60-minute chart. What I did very, very simply is I used my Fibonacci extensions. I marked from this high to this low to this high. And it said that, you know what? If you're going to replicate that, you could come down to 189.97, give or take a little bit. If it's 190.50 or something, so be it. But if and only if we come down to there and make a positive move, I'm going to look at taking a full position at those 417 200 calls for that target from my daily chart, that 203.73. while still using my swing points from my weekly chart, that 195.45, to be an exit point for puts, with the exception of the 180s, because I really, sometimes a gut feeling goes a long way. Sometimes it screws me, but that's kind of where I'm at with GS. So to recap this, and I know I might have lost some people going 20 minutes, 21 minutes in this video so far. My focus group has the available funds to make 3 buys. The number one priority of all the trades for me to look at is the 417, 124.29 puts for Apple. Number one priority. The number two priority is kind of like both of the other potential trades, which would be one of those 50-50 trades listed for the 60-minute chart of Apple, and on my 60-minute chart of Goldman Sachs, if and only if it pulled back to here and made a positive move from it, would I look to buy more of those 417 $200 calls. So that's my plan moving forward with the focus group. And, we'll see if by the time we get into the next earnings quarter, before these April 17th expire, I really think we'll be back on track, looking good, and still in a position where I can make my goal achievable still. So, it's been a little frustrating. I'm not going to sway from that. But it's still manageable, at least by my expectations.